Hello, everyone. Welcome to this panel on embedded finance for the Singapore FinTech Festival. A big thank you to API Exchange for this oxygen session. Now, a lot of people say technology is embedded in everything, including finance. I mean, JP Morgan these days even calls it a tech company. But increasingly, this flows the other way, with tech companies increasingly either collaborating with financial services providers or becoming financial companies themselves. From retail to logistics to agriculture, finance is finding new ways to market. So investment and interest in the firms that connect providers to these clients, offering everything from insurance, payment services to even loans. But with all this comes some pretty significant hurdles and considerations, particularly in Asia, where there is a rapidly evolving policy and regulatory environment. This panel is going to explore how firms are working with regulators, traditional banks, and what they're finding to be the pain points and the priorities in terms of regulation and data security and other aspects. So what do we need from these banks of the future, and what do these banks of the future need? More to the point. So helping me answer that question today is Neha Shri, the co-founder and chief marketing officer at Jumper AI, a conversational commerce platform that helps businesses sell to consumers on social media and messaging apps. She joins us from Singapore. Next, we have ER Roland, the chief executive and co-founder of Grow Sari, which is a startup helping the 1 million Philippines mom and pop or sari stores transform themselves through technology. So that's from the Philippines. We also have today Onyekachi Izukane, the co-founder of Trade Depot, a company in Africa that is a business-to-business supply chain for micro-retailers. Kachi joins us from Nigeria. And finally, we have R. Narayan, who's the head of Power to SME, an India B2B online platform aimed at helping small and medium-sized enterprises with a variety of needs. So I'd like to start with Neha, Jumper AI. Can you talk me through a bit about why Jumper embarked on the financial services journey and what gaps you saw that prompted that decision? I think you're on mute.
Sorry about that. Yeah, so Jumper essentially helps businesses, kind of reach to their customers and enable the entire sales process within any social media or messaging channel. Now, when we started, this has been a consumer trend. More and more consumers, are not just using these apps to talk to family and friends, but they're also, speaking to businesses via WhatsApp, via Messenger. But one of the biggest gaps there is that it's all very fragmented. So it's just an exchange of messages. Then you go off to another platform to enable the payment. Maybe you're doing a bank transfer or anything like that. And there's a huge lack of trust happening there, and something that I myself faced. So hence when we started thinking about this product, one of the key essentials was that how do we enable the entire payment to happen within the same messaging context, right? And also because as we grew, we started seeing that from the conversational data perspective, we get a lot of information about, what the consumer's sentiments are about the brand or about the business, how are they perceiving the products, how likely they are to buy in the future. And from there, we started understanding that there's also a scope to build a financial service, a loan and a credit system service around this to help businesses, let's say, get loans and take loans from other banks.
Thank you. And ER Grow Sari kind of similarly started out with a promise kind of to fix supply chain issues for the Philippine sari stores, but you've also moved beyond that, delivering FMCG products kind of earlier vision into now making these stores more like, I guess, a 7-Eleven. And can you talk to me a bit about that choice and how you went from that canned goods delivery kind of approach to now thinking about these sari as a place where you can pay bills or even remit money?
Right. I think for us, it's a realization that, these 1 million stores in the Philippines continue to be the most accessible retail point to virtually any consumer. And they continue to be resilient because their business model is really very, low cost. It's run out of their houses. They don't really hire employees. So, it's very low cost to run them. And they do have that captured market of maybe between 10 to 25 neighbors that are all a stone's throw away from these stores. So while for decades they have been a reseller of FMCG goods to these communities, having that retail network, it feels such a shame not to transform them to become truly community centers in those areas. So that's kind of been the inspiration, and they are small, and they're kind of and they have that personal relationship with the neighbor, so there's trust, and so it's just a matter of using technology to really leverage that network.
Thank you. And Kachi, we spoke a bit about how you're helping micro retailers in Africa. I mean, at what point did you recognize that the financial services opportunity within that?
Right. So this was, I would say, quite clear right off the bat. I think a few things just to give context. The consumer goods retail space in Africa, over 90% of this happens through informal and small micro retailers, right? And to put things in perspective, less than 10% of this audience has access to financial services like loans, and even a much smaller percentage, probably less than 2%, have access to things like insurance, right? So just from day one, it was very clear that if you're looking at the things holding them back, access to financial services is usually a big one, right? And the challenge was figuring out a realistic way of doing this, because these guys are mostly excluded from financial services because banks don't have data to use to credit score them, But you kind of realize there's an opportunity using the data you're able to build with them to extend those types of services to them. And because they kind of build some comfort working within your platform, it becomes easier for them to adopt these services within the platform.
And I think, Narayan, I believe you as well, at Powered SME, you guys saw the need, the opportunity and the need to embed a finance option quite early on as well. Is that correct?
Yep, absolutely. So, the journey has been that we started out as raw material aggregators, because if you see a SME, especially a manufacturing SME, and if you analyze his monthly wallet spend, you'll realize that close to 80% of his spend is on raw materials, and we realized that they didn't have economies of scale, and they bought at a much higher price than large enterprises. So Powered SME became like an enterprise that aggregates and gets them the advantage of scale. But very quickly into the journey, in a B2B business, working capital and credit is very important parts of the business, because when you're working with manufacturing and the SME segment, they thrive and survive on supplier credit. At least a very large part of it, that's what happens in India. So what you realize is that the most important for you to continue to stay in business is to understand the credit profile and the credit worthiness of the customer kind of stuff. So we quickly turned from a raw material first to a finance first company, right? And in our journey, what we did is we curated a platform called Finance for SMEs, right? So where they could upload their data and get credit check evaluated, etc. We brought around 20 partnerships to this place, from various banks and NBFCs that are there in India kind of stuff. And later on, as two things happened is that, one is there was a tightening of the resources at the financial institutions in India in 2018, when one of the largest financial corporations, ILFS, went belly up, right? So at that point of time, one thing is ILF is going belly up. The other part is that Reserve Bank of India, which is the Federal Bank of India, they kind of loosened their strings and said that they would welcome more companies to come up in the NBFC FI space, and the regulations became a little easier to do. So what we did at that point of time is we went to the RBI and took a banking NBFC license from them. And we got it in record time. And from 2019, what we've also become is we've become a lending institutions. And, just to tell you the way things work in India, in terms of, if I owe you $50 and I don't pay you, it doesn't affect me at all. But if I owe the bank 10 cents and I don't pay them, it affects my credit ratings, my CIBIL scores, and all of that kind of stuff. So rather than being an operational creditor to any of our SMEs, being a financial creditor gives us much more security. So all these reasons put together, we decided to embed finance and then push that finance face front to our SMEs.
So I think, just even those brief explanations of the journey, or kind of all your companies went on into financial, into embedded finance. It just shows that, it is these real sector firms like yourselves that are pushing the needle and kind of at the forefront of addressing the needs of this huge base of people that kind of traditional banks are not reaching. But I guess one of the questions I wanted to ask is, we touched on this a little bit, but a lot of you, and not all of you, but some of you, have a lot of partners. How do you think about that process and who you partner with, and what they can provide you and what the downside and upsides were? Perhaps now, how you can start. As I know you're an open platform and you don't own your payment stack. Maybe you could tell me a bit about why that is, but then I know you do have some big partnerships, such as South Africa's biggest digital bank. So perhaps you could tell me a bit about how that partnership came about too. I think you're on mute again.
Sorry. So I'll just answer your first question. So yes, when we started, we decided that we'll have a very agnostic approach in terms of how we build the entire ecosystem. Because when you think about retail or retail enablement in general, right, it's a very fragmented ecosystem, right? And across different layers of businesses, they have different requirements. And one of the things was that since we are built on top of social media and messaging platforms, there's already a huge concern, when it comes to data, right? I think today just the news came out about FTC passing, a regulation against Facebook, right? Because they have a very high, high up advantage. And we see that, eventually in the payment space as well, that will happen, right? Obviously all these social media platforms are trying to go there, but when we look at Brazil or with India with Facebook with WhatsApp Pay, there has been a lot of regulatory concerns there, right? And that's where we feel there is a requirement to have open players like us who enable that technology that any business that wants to let's say enable utilize these applications to drive their revenue and drive their finances, but from the banking ecosystem, payments ecosystem, it's an open ground, right? So that's why we've kept our platform open. We feel like that's the way forward. Whether it's data, whether it's payments, we need a level playing ground for anybody to be able to capitalize on these mass markets. In terms of how we go about choosing our partners, I think there are a couple of things that are important. Obviously, there is in levels of penetration, which there are certain payment players or certain banks which will have a better penetration into the market. So that's obviously one thing, because as a startup we want to get into a scale, right? We want to rapidly scale things. So that's one. But the second consideration, which is much more important, is basically we require our partners to be able to understand, the changes, the micro level changes that are happening via social commerce. How, let's say, taking South Africa in picture, there are lots of SMEs. It's an emerging market, lots of SMEs, and they require the tools so that they can scale their online operations, right? Especially given this year, it's become more important than ever. But at the same time, when you start thinking about SMEs from a B2B service provider perspective, you need to start thinking about how do you really go about monetizing, right? Because they do have a lot of challenges. They might not necessarily want to pay for online tools. They require a lot of onboarding support as well. So that's where we started defining and understanding who are the other partners, who kind of have also paths to revenue, right? So, we are not just trying to acquire a huge base, but we're also seeing how do we build out a profitable company with the same while keeping it an open ecosystem.
I think, like you say, it is a challenge still picking the correct partners. I think, Narayan, you just spoke a little bit about it earlier, about kind of the lessons and fragility of having partners with the collab. Was it I can't remember which one you just mentioned went belly up, but
yeah, ILFS.
Yeah. So now you've kind of ruled out working with traditional banks at all, and you rely more on yourselves. Can you talk a little bit more about that journey and how kind of what maybe some of the difficult, even while it's kind of the best thing for the business, what some of the difficulties were with that approach?
Yeah, so we built this platform I said earlier called Finance for the SMEs, so Finance Me, where we kind of build algorithms to get all the data from the SME, his last 3 years financial transactions, his bank statements, doing a credit check, doing a legal check, all of that, right? So as soon as we could create this platform, a bunch of banks and NBFCs came and tied up with us, and over a course of maybe 4 or 5 years. We provided through these banks almost $100 million worth of credit to our SME base. And, that was a sizable number and everything was working very well, right? Now, I mean, this partnership lasted over 3-4 years. But then when ILFS, which is one of the largest FIs, went belly up, what happened is the money supply in the market completely dried up. All corporate bonds were being called back. So, the financial institutes had to pay back the people from whom they are taking deposits, right? So there was very little money for them to lend. So that is when the fragility of the partnership you realize is that, I mean, partners is a great thing, but it can't be only partners. And that is when we said that, yes, we will continue with our partnerships, but we need to put our skin in the game and get that banking license for ourselves and go lend. And, so that the supply doesn't completely dry up when many of these fiascos happen, so that we have our skin in the game. And it is not that we have given up on partnerships. With all my SMEs, we do lending, our partners come and co-lend along with them. But earlier we were completely dependent on the resources of these partners only. So that kind of made our business model much stronger by, saying that not only partners, but partners and us kind of stuff, and led by us rather than led by partners.
Good. And I believe e-wallet companies were falling over themselves to work with you and get access to these saris and that ecosystem that opened up. I mean, but I do wonder, do you fear that transaction point in future might not actually pass through you guys? And how are you working and thinking about your relationships with banks and other financial players to ensure that doesn't happen?
Right. I think just to echo what Naya and Narayan has been saying, what businesses like ours do is to give such partners a go-to-market model or an operating model that doesn't exist in the past. Because if within their existing infrastructure, if they were to do it in that way, the cost to serve model is not going to be sustainable, right? So that's why we work with companies like our companies to get the reach. And to get the cost to serve model that is not available. So, I'd like to echo their point that, in the beginning, it's important to have those partnerships because it at least gives us some savings on end consumer education, because we don't have to build brands of our own when we start, when we do these ourselves. But over time, once you have the network and the reach, there's no reason why you can't take that on fully and kind of get the lion's share of the margin. I think for us specifically to your question on e-wallets, it's kind of the same case. I think the challenge in the Philippines is that 2/3 of the population continues to be unbanked. So even if people get into e-wallets and agency banking and things like that, they still need a physical infrastructure to do some sort of a cash-in transaction, right? Because these guys are not banked. So the way the sari-sari stores play a role is, either you do the transactions in the store themselves or you use the store as a cash-in point. Either way, the ecosystem has a role to play. And we see this, playing out over the next couple of years because I think the challenge of having an unbanked population and the fact that there's no financial institution that is incentivized enough to bank all of them is going to stay. And so I think that's where companies like us come in.
And Kachi, I know for you took kind of a slightly different, depending on what service it was, be it insurance or lending, kind of choosing different partners. So why did you do that?
Very well. So for the insurance, it made the most sense to look for a partner with enough of a global reach, because for us, it's important to be able to use the same partner in different markets on the continent, right? But in addition to that, we needed, a certain level of flexibility and approach to pricing that was a fit for the target audience, right? So just being able to find all these things together made it easy to think of working with that partner and then building that into our product in a way that we still create the single seamless experience for the customer. Now, for the lending bit, it wasn't as easy to do that. And now, just the way our lending works, we don't give cash to the merchants. We give them loans in the form of inventory, right? But then what we've done is rolled out a wallet so that wallet tracks the value of the loan that they have, and that is what is used to service that. So, I mean, the flexibility to build out a model that does this in this way, and to build out a pricing model as well that makes sense, because these merchants work with slim margins. They make their money by turning the capital a couple of times. So both in how you price the loan and how you structure the repayment has to be a fit, right? So we figured that, look, if we're working with a partner to do this, we will be working with the partner to build it, because that model wasn't going to be available out of the box. And we figured that, if we did this ourselves, it gives us an opportunity to own a bigger chunk of the revenues coming out of it as well. So we went in that direction for this product. I think the additional thing as well is in the scoring models, right? In this scenario, we're not using access to credit bureaus or, the conventional access to telco data, which is what you find most digital non-bank lenders here using. We need to score them using an understanding of their transaction histories, right? We need to build a creditworthiness profile based on how they've been transacting with us. And it made sense to invest in building this internally. And this is the approach we took for this bit.
I guess, I wonder, like a lot of you have spoken about kind of the partners you're picking. A lot of them are kind of already kind of digital companies. What about kind of old guard companies and your ability to work with them? Have you had much success? I mean, I'm thinking even like traditional banks. And happy to throw this out to whoever wants to answer. But what could some of these older stuff? I mean, I don't want to say old-fashioned, but because many of them are still with us today. But what could they be doing better to work with players like yourselves?
If I may?
Please.
So, in our partnerships that we built, there was a lot of these brick and mortar banks that also signed up kind of stuff. So what we realized is that it is very difficult for the brick and mortar bank to change their DNA overnight. And, they like the touch and feel of that paper in their hand and do all of that stuff. So there were distinctly two flavors to the partnership we found, is that whenever the bank, empowered and put forward a person who understood digital technologies and how things could be done, the partnership would work. But if you put a young bloke who's a tech bloke out there who can do stuff, but he's not empowered enough by the bank, then it will not happen. So I'll give you an example. The same loans went to two different banks. In one bank, this guy was empowered, so he could push it through the system. In the other bank, though this guy had the same set of data, he went back to the general manager and the general manager will come back and saying that, oh no, this is a no-go sector for us, and therefore give it up. So it's completely on the person leading the initiative and how empowered, and that is our finding in the working with the old world kind of stuff.
I think what I can add to that is just the willingness to share margin in certain situations, like especially in Philippines where most industries are controlled by, a number of big financial institutions, and they've created this addiction to charge for every transaction and make money on everything. And when you're trying to build an agency banking model where these deposit transactions, these remittance transactions happen in sari-sari stores, the reality is we're not using their branches because it's these stores, it's the physical stores they're using. We're not even using their working capital because it's the working capital of these small stores that are being plowed into that wallet, or our working capital in the form of credit, right? But when you start to get into sharing margins and revenues, you still see some sort of resistance to open it up to the ecosystem a bit more, so that the entire thing grows. So that has been a specific challenge for us, because in theory, they like the idea that they will get the reach. But I think, are they really kind of putting their money where their mouth is in terms of investing on those reach channels? I'm not sure that's something we've seen broadly.
I see a lot of nodding heads here in the audience, so I suspect you're not alone. If anyone, Kachi, have you got something to add?
Yeah, no, I was just going to say that, just to add to what Narayan and ER have said, I think also having the right incentives matters. And what I mean is, for many of the banks, where they don't feel threatened because regulation will stifle you and you can't do this without them, there is less of an incentive for them to want to do anything, right? And I've seen that in scenarios where you have more open markets that foster innovation a bit more, or make it easier for that fintech to find a way to do this without the bank. The banks then start sitting up because they realize that, look, if this model becomes more useful for my customer, I run the risk of losing my customer, right? And so in every scenario where I've seen actually, which is a role regulation plays really, where I've seen the markets open enough to allow new entrants to be able to roll out innovation, just having that threat of losing your revenues or your customer is an incentive, and these incentives play a role. So when you have even people that are less empowered being the contact point, when their management structures recognize that this is a risk to our bottom line, there is a bit more of an incentive to begin to rethink the old traditional models.
Yeah, no, that's fascinating. I wonder if we have some traditional players in the audience who might like to send some questions in response to some of these challenges. So moving on, sorry, realizing the time. So I think, what we've spoken a little bit about partnerships, spoken a little bit about the kind of journey into finance, but I think what we haven't touched, we touched on a little bit, but not as much, is kind of the regulation aspect and the questions over data. So Noha, I mean, what regulations have you seen that governments are coming up with in terms of customer data? And do you have any good or bad examples you can share from your experience?
Yeah, sure. So I think in general, most countries, EU kind of set the trend, and now all the governments kind of want to take control over how their citizens' data is handled, right? I think one of the biggest challenges that I see with that happening is for startups, basically, right? Because, you now need to start, it's no more like, okay, you start a digital company and now you can just go and acquire customers from anywhere. Right now, you need to start thinking about what are the local regulations, right? What are the laws that are coming forward as well, right? What is the country thinking about it? You need to always keep up with it. And the other thing is this is all dynamically changing. So if something was true the last year, you'd see there are some new editors that have been added on top. So one thing that I do feel is going ahead 2 years down the line, we would either see a spring up of startups who are just trying to solve this problem, so that while the big giants can really Google or Facebook can probably tackle this out, but for most mid-sized startups and companies as well, this is going to be a big challenge to keep operating in different markets. So that's one. In terms of good or bad examples, I think it's difficult to specifically pinpoint because everybody seems to be in that figuring out mode, right? Some and a lot of places, while EU has it very specific, in Indonesia there's MOCI, which is kind of so far advisory, right? That you do it and it will eventually come in, right? So we do see that there's a lot happening in, but I think from a regulator perspective also, I have seen where there are gaps where internet companies exist and they use data in certain ways, but kind of regulators are not aware. So I think there needs to be a lot more dialogue happening in, especially with newer companies or even companies that are a decade old, and how they are kind of utilizing data. There are just too many models, and it's almost what I call is it's like a pirate thing, right? Somebody will always find another way to utilize data. So it's about how do you kind of balance that as well? That's important, and that's I think kind of lacking in the overall ecosystem right now.
Mm. And do you think, I mean, one of the things that we always hear is how, low barriers to entry and startups can kind of go from a standing start and get big quickly and have lots of data at their disposal. I mean, is that making it harder for that to happen for startups? Is it kind of limiting the amount of new entrants that can come in and have an impact?
Yeah, I think definitely, as the regulations are maturing, that's definitely getting difficult. Like, especially this year, like till last year, we were not seeing, as much, as many regulatory requirements coming in. But now we are kind of working this very individually on a country specific level. And that means that, you're constantly trying to stay updated, right? And you need a lot of like legal services. You need a lot of like, you need to understand the data privacy laws and its implications across different countries. You need to think about, you need like, cloud infrastructure, servers, specific in those markets as well, right? Right now, it's all lean, but obviously, I think 2 years, 5 years down the line, that's not going to be the way, right? Regulators would require that, you host the data in the same country. That means that you need like, different infrastructures. It's kind of becomes like, the word like entering into China is really difficult, right? Just because everything is closed there. It somehow feels like things are going that way. And my hope is that, we probably have a bunch of like companies, bringing up in the next few years, which helps solve this problem.
Yes, so certainly a warning that this is becoming kind of a China style concern is very interesting. I mean, Narayan as well. I mean, India in particular, I find has quite a rapidly evolving regulatory environment. I mean, how do you get kind of greater visibility on your business's future needs, but also how would you advise other companies to be and what should they be thinking about in terms of complying with a lot of this stuff and anticipating?
See, India has not yet enacted any specific legislation on data protection. The Personal Data Protection Bill was passed in 2019 and introduced in the Parliament about a year ago. The purpose of this bill, of course, is to provide for protection of privacy of individuals regarding their personal data. And secondly, to also establish a data protection authority in India, which is not there right now. Right, so that you can decide what is personal data, what is public data, etc. This will, the thing is also in terms of applicability. This will apply to the processing of the personal data that has been collected, disclosed, shared, or otherwise processed within the territory of India, but by the government, any Indian company, any citizen of India, and foreign companies, etc. Right, the Data Protection Authority. They have proposed a Data Protection Authority of India, which will take steps to protect the interest of individuals, prevent misuse of personal data, ensure compliance with the bill, and promote awareness. So if you look at it, currently what is happening is, there is restriction of transfer of data outside India. Sensitive personal data may be transferred outside for processing if explicit consent is given by the individual, but even then that data has to be stored within the country. So, so like I said, it's just been set up. This bill is still a bill. And hopefully when the parliament passes it, it'll become an act, and then we'll have complete clarity on how this will pan out. Till then, you're continuously working and seeing, like what Naiha said, you're trying to understand what are the updates that are coming up, which parts are becoming gray, which parts are becoming black and white kind of stuff. Mm.
And what do you think of this approach by regulators, though, that data should all be in country and that they should have kind of total control over it? I mean, is that realistic? I'd love ER and Kachi as well, if you have a view on this.
So, I mean, in today's day of, hackers and, what is happening, how does some data remaining in country A versus country B make it more protective? Right. So the whole idea is you need to be under a level of security which is recommended, and then you don't really care where the data sits. So is the way I would look at it. And that's my personal view completely.
Right. I mean, I think in the Philippines, it's a bit of a mixed bag because it's like India, we're very early in the journey. People are the government is just mandating companies to have a data privacy officer. Companies need to attend seminars. They need to comply with certain things, but nothing really kind of serious at the moment. But I think I do feel like there's a PR angle to it because you do see pockets where, if there's grave misuse, you'll see a lot of attention towards that. But then, like for example, during the pandemic, and when we had to have a lot of lockdowns, the governments realized that if they wanted to give out relief to its citizens in the form of cash, because people are unbanked, they don't have a facility to give that relief to. And number two, because the data infrastructure is so bad, they can't even track if dead people voting, as they say, right, or dead people claiming money. So, in places where they're realizing some form of data infrastructure is required, there's a lot of kind of gravity towards. But then in places where they think there's a PR risk to it, they'll probably clamp down a bit more. So I think it's still at the stage where it depends on how the company is kind of navigating both equally. And plus I think the challenge is going to be enforcement, right? So even if these governments will have a bill or will have a certain law passed, how are they really gonna be able to monitor usage? So I think that's going to be the challenge. We just have to trust that companies, each individual companies have ethical boundaries, right, in terms of how they use it. But I think that's going to be, we're a long way from the regulatory making kind of a material impact in terms of operations, at least here in the Philippines.
It would be nice to assume that everyone has good ethical boundaries, but unfortunately, I think history suggests they don't. But anyway,
Right.
Kachi, I think you were gonna jump in there. I think.
No, I mean it's very similar to.
You're across a number of different countries.
Yeah, so very similar to Philippines. For many of the countries we see here in Africa, the data protection regulation, if you could call it that, doesn't really exist in a real sense. I mean, there's some guidelines put out now that are in very early stages of implementation. I think just to the question you asked earlier about how smart, one would look at the idea that the data has to be in country. I think just fundamentally, it will be a disadvantage to startups in countries with limited data infrastructure, right? In the end, if you're constrained to keep data within a country in which there hasn't been sufficient investment in the right type of infrastructure to allow you run your business, you're either going to have to do this at much higher cost than competition or not be able to do it at all, right? So I think a bit more smartness needs to go into coming up with the right kind of regulation, especially for markets like that.
I think I'd love to ask Naiha as well a little bit about kind of the big social, I should say, instant messaging platforms. I mean, Facebook is just one that comes to mind, and what they're trying to do with WhatsApp. And they've gone into India. Obviously, there's been regulatory issues for them as well. But they've gone into Indonesia, gone to Brazil. But to me, they seem much more of a less open approach, more of a walled kind of garden approach. And what I guess that's one way they differ. And how does that impact businesses like yourself, and the future of debate about the whole question of embedded finance?
Yeah, I think one of the concerns that definitely is there, and we always get this asked, right? Like, what if Facebook completely ventures into your space, right? And I think for us, we are playing safe because we have a very vertical. So we work with enterprises as well, and we have SME products as well, but obviously, it kind of start getting really scary from a perspective of anybody who's trying to focus on one specific market and do that extremely well, right? It obviously ups the challenge a lot. You're always fighting, right? I think, and that's one bigger problem with most of these bigger organizations is that they try and cut out the resource system while they say they have a very open ecosystem and partner ecosystem, but it always once in a while just keeps coming in like that. In terms of beyond Facebook, obviously Apple is trying to get into the same space as well with Apple Pay and Apple Business Chat, Google with Google Pay and Google Business Messages as well. I think it's to be seen because with the messaging or social, the players are already defined, right? Like where Facebook is the leader, Facebook is already the leader, right? So if it's Messenger in the Philippines or it's WhatsApp in Indonesia, I think those are Line in Thailand. Those markets are very well defined. I think the question is that how do we ensure and social is a big thing, right? Because 90% of the emerging markets, the users are mobile consumers. So you're talking about access to all these consumers being limited to one platform, and that platform owning everything, right from not just from advertising, but going into like payments, going into finance, going to everything, right? So it definitely makes it a lot more difficult for newer companies to have a fair play there, right? So yeah, we'll have to see. Obviously, there has been growing concerns, among the regulatories as well, and we'll see how what's happening in the US kind of comes across to other parts of the world.
Yes, well, just today, as we know, it's Facebook, because things aren't looking so rosy, I guess. Yar or Kachi, I mean, is there anything to add to that, do you think? I mean, and do you have any experience with the WhatsApps and the Facebook Messengers or Apples or anything that you can share?
Right. So we've seen those platforms to be one of WhatsApp in particular has been a very important channel, even for commerce. Right. We find that just because of how actively used it is by many players, they tend to want to use it for the transactions as well. Now, you don't get the right level of support from an API standpoint to actually build out what you need at scale. But there are various ways of making it. But generally, we reckon that just because of the level of adoption you find with these platforms, right, as it would let you tends to come in as a channel to begin to look at how you embed additional financial services onto. So, for instance, being able to roll out something that achieves finance on that platform will certainly have very high adoption rate compared to various other channels, you would think.
Mm-hmm. Yep. I've just realized that our time is short, running out. But Narayan as well. I mean, have you in India? Certainly, that seems to be the focus of a company like Facebook. What's your priorities when dealing with this kind of new player they're not new anymore, but dealing with this player in the market?
So Mercedes, fortunately, we are in the B2B space, and this consumer thing does not affect us too. We ran a journey for 2 years in between where we were trying to track their mobile data and their Facebook chats and all of that stuff, and it added nothing to the credit profile of the customer that, we could say that he was more creditworthy or less. So we kind of, it was a fad that happened with us in between, but we kind of, realized that it doesn't contribute in the, when you're actually putting out cash as a loan out there, it does not contribute such a large part,
Yeah, makes sense. I guess I would love to just finish by asking, we haven't had any questions, unfortunately, come in from the audience, but maybe we could just finish by saying, are we always going to have this impression that kind of fintechs and old guard financial institutions have to always fight each other? What can be, we did talk about this a little bit, but what more can be done to improve the impression? I mean, does it need to be eked out between themselves? Does it need to be the regulators doing this, or how should we think about it?
It's a marriage that's bound to happen, either forced by a regulator or partnerships finding their own fit. We did in India. I can talk about especially from the PR front, a lot of these old world banks quickly brought on board a lot of fintech companies and did MOUs, etc. out of them. But whether like I said, the MOUs on paper and flashing it in press is one part, but the DNAs matching and starting to working together is another part of it. So I would think it'll need that DNA change, and that DNA change might either come through re-education in the older world in terms of adapting it, or change of guard. So some of these things will happen which will enable this marriage to happen, but this marriage will happen. Because it's pointless when there are so many other fintech and digital platforms trying to build the whole thing all over yourselves. Does not make so much sense when it's already there.
So, well, I'm afraid that's all we have time for today. It's gone remarkably quick, but just want to thank all my panelists, because I think this has been a really fascinating chat. Particularly because just hearing from people on the ground and kind of what are the real problems and real issues that that kind of real for sector firms like yourselves are having. So obviously there's quite a lot to go from just like listening to all of you for what needs to be done in this space, in particular in embedded finance. So hopefully that leaves our viewers with food for thought as well. And thank you very much for joining us. And there's definitely much more to be said on this topic, I think.
Thank you for having us on the panel.
Thank you.
Thanks a lot.
Thank you, guys.
Thank you.